the markets are in the green, but could they be in the red? And it could be a scary time, more danger than opportunity. Well, let's see with our next guest. Joining us now to discuss the crypto markets, Joe Orsini, Vice President of Research at Eaglebrook Advisors. Welcome back, Joe.
Thanks for having me on. Happy New Year.
Happy New Year to you. But it might not be a happy New Year because we just saw the CPI numbers come in, 6.5%. Bitcoin has been moving steadily up above 18,000. We're seeing ETH moving up as well. Yet you think that there's a change in market sentiment towards, and I'm going to use a quote from you, this isn't me, danger than opportunity. And that's even for long-term investors. Can you explain why this might not be a great market as people might be seeing right now?
No, so, honestly, we believe it's kind of quite the opposite. We think 2022 kind of made the perception that there's more danger than opportunity in markets. I mean, you kind of consider, long-term returns over not just decades, but centuries. Capital markets in general used to be an avenue of opportunity. And so, we want to change that, ideology. And of course, there's a lot of concerns, but there's always rough waters and there are always reasons not to invest. But, long-term investors that responsibly position size and they, tactically rebalance and have discipline in that, there are a lot of opportunities in the market despite kind of the recency bias that people see. And, of course, they're pointing to the number of rollovers after the bear market rallies that occur in 2022. So ultimately, people don't believe in any rally, but we think that this is the time where, you do have to consider the opportunities that 2023 can present. And what we just saw with the inflation numbers particularly, of course, is that there's continued disinflation, right? And in this regard, even headline number was deflationary today. And so that was the market's biggest concern. And really that impact on yields and of course the Fed's process of normalization and that impact on the dollar, and all of those things are slowly improving. And so we want to point to the opportunity. Again, of course there's always risk, there's near-term contagion risk, but there's long-term opportunity, and those are the conversations that we've been having.
As the Fed has pointed out repeatedly that 2% is their target long-term average rate, and of course we've been above that. For us to get back down to that 2%, we actually have to go below 2% in inflation, and in fact, not just disinflation but deflation, perhaps, just to average it out to about 2% per year, which could signal that the Fed might stay aggressive or at least hawkish, at least for a lot longer than the market expects. This is coming at the same time as crypto volumes are nowhere near where they were before that had led them up to these rallies. So you have these two things happening at once, low volume plus an aggressive Fed or a hawkish Fed. Where do you see that opportunity then?
Sure. So in terms of the Fed's hawkishness, of course, they'd rather talk tough than act tough. And, they're pointing to kind of their median projections of the dots, above 5.5%. But ultimately, the market does not believe that. And if you kind of consider where the 2-year is and really where the implied policy rates are, the market is still thinking 5% is going to be the peak rate. And when you kind of consider disinflation, exactly what you said, oftentimes it's very hard for them to just land on 2% year over year. And so the risk really is deflation and continued deflation. And really, that's what we believe the Fed might have to manage throughout 2023. And you look at the labor market remains strong and resilient. And so, Q3 GDP 2.6%, Q4, GDP now estimated at 4%. So the economy is moving forward. The labor market is strong and disinflation is occurring. And so really, the Fed again would rather talk tough than act tough. And ultimately, because they don't want that inflation, expectations to re-rise, they want to keep inflation expectations down. It's often a feedback loop in that regard. And so, of course, they'd rather talk tough than act tough. In terms of Bitcoin volumes, of course, we've had very large players, since May, really, and of course in November start to kind of fall by the wayside. So naturally, crypto volumes will be down. But if you kind of look at the equity market and perhaps, and we're not saying this is true, but perhaps equities outperform and really kind of show, surprise to the upside, there will be that relative value and relative interest in crypto because it is off of its, because it is at its lows, right? And so we've had that 70% drawdown. Of course, the V-shaped recovery may not occur right now, but ultimately there again is a bottoming process. And when you kind of consider Bitcoin's price at the current juncture, 18.2, we're back above those June lows again. And so again, it's about patience, it's about maintaining conviction, and again, responsibly position sizing, because if you don't, then you're really going to feel these downside much larger. So responsibly position size, rebalance when the time warrants. And if you kind of consider all of Bitcoin's major lows, they're all around semi-annual rebalancing periods, which is a coincidence, but it is also interesting. And again, it's all about disciplined approach. It's about same ideology with equities: buy quality assets and wait long periods of time. We believe Bitcoin and Ether and the large cap alts are quality assets. And so when you kind of consider how tough 2022 was, and then you kind of look at history and say, okay, well, it could be better this year, and it likely will be, as we're seeing the macro situation improve. Now, of course,
Joe, do you have a price target for Bitcoin?
So we've hesitated to do price targets, of course, and then we're working on something, maybe making it a little bit more public. Of course, we believe it'd be higher. You did see, ETH kind of rally to that 200-day moving average around 1,400. Near term, if this Bitcoin rally does sustain, you could probably imagine it to kind of head to that 200-day moving average around 19,500. But that's near term. Again, we're long-term buy and hold investors, tactical and disciplined rebalancing. And so again, after the
long-term
drawdown,
Bitcoin, what will it be at by the end of the year?
Again, by the end of the year, we'd rather not give a price target at this moment. Maybe we'll come out with one in a couple of months. But again, we do believe it will be higher. And ultimately, it will be climbing the wall of worry, just as it has after every drawdown that's been experienced.